Hey, what's up guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I'm going to show you another 5 stocks, penny stocks that I think will do well in the biotech industry. So let's get right into it. And by the way guys, I'm not a financial analyst. All of these stock picks that I have today for you are just my opinions and what other people are saying and what other analysts are saying to put on your watch list. These are not recommendations. These are not calls for you to go ahead and buy them. I'm just making these videos so that you guys can put them on your watch list just to be on the lookout for them, because they could have good potential and enormous payouts based on some of the catalysts that I'm going to be mentioning. So the first penny stock that I have today is called CLSN Corp with the ticker symbol CLSN. CLSN Corp is an interesting clinical stage biotech company with a large pipeline, not compounds. This includes those used in cancer treatment, immunotherapies, and DNA-based therapies. As you know from previously, I love doing videos in biotech companies because these guys are involved with cancer research, and it really is very important to deal with cancer because cancer is a very big killer in the United States and even around the world. CLSN has been working on developing nucleic acid vaccines focused on SARS-CoV-2. Within its pipeline, CLSN produces GEN1, which is a DNA-based treatment for ovarian cancer. It also produces Thermodox, which is under investigation for its ability to treat several types of cancer. On April 5th, CLSN announced the closing of a $15 million registered direct offering. The offering will consist of over 11.53 million shares sold at $1.30 per share. CLSN will use the proceeds to further its research and development activities, among other things. In a recent update, CLSN highlighted that its immunotherapy GEN1 showed a 41% improvement in resection rates among ovarian cancer patients. This demonstrated that 41% of patients saw no gross or microscopic tumor in their primary tumor bed. The announcement of this data is highly encouraging because it shows commercialization of GEN1 could be closer than previously imagined. So with its strong balance sheet and a large pipeline of promising compounds, CLSN could be worth watching. And taking a look at their stock right now on their chart, you could see that they're trading at $1.43, and they were trading at around $3.68 back in July of 2020 when they really went down and they went to $1.25. But then the gap got filled right here. You can see that it went all the way back up to $2.26 around February of this year, 2021, and right now we're at $1.43. The RSI strength is at 38, and the stochastics is at 8, and the momentum is at negative 0.9, which shows that there's really not a lot of movement going on, and there's a lot of bearish sentiment on this stock currently, but it could be an opportunity for it to boom if this FDA approval goes through later on this year. So it should be on your watch list because it's very cheap right now. And you can see before it was trading all the way up to around 485. Also, Tip Ranks has a rating on this of a moderate buy, and based on one analyst offering a 12-month price target, they are saying that this stock can go to $4 as a high forecast and $4 as a low forecast. So from its current position, we could see this stock going up about 179.7% from where we are. So it's something to look out for. Okay guys, my second stock pick today is Titan Medical. Titan Medical is another biotech penny stock, but one that works in a different market area. TMDI is a medical tech provider utilizing robotics to help make breakthroughs in the surgical industry. This includes the ENOS system, which offers both 2D and 3D vision systems and a range of multi-articulating surgical instruments. All of this is encompassed in a state-of-the-art, ergonomically designed workstation. What this literally means is that for those who have surgeries, this system and this robot-assisted surgery allows patients less trauma, shorter hospitalization time, less scarring, faster recovery times, and reduced post-operative pain. Who wouldn't want that, right? With a strong cash position and expert in-house technical talent, the advanced development of the ENOS surgical system is at full intensity. The company states that the U.S. surgical robotics market could reach $18 billion in value within the next several years. It argues that there are 6 million procedures each year that could utilize its eNOS system. Right now, there is a major lack of robotic surgery providers, which could obviously benefit Titan. So let's check out their stock chart here. Right now, today, they're trading at $2.02. They went up 12.85% today by 23 cents. And that was based on a huge volume of 36.08 million shares. And you can see that the RSI strength shot up a little bit to 54, and the stochastics went up a little bit to 32, and the momentum is right at 0 right now, or 0.1. So we could see this stock potentially go higher if this company starts producing more robotics that a lot of hospitals could use for their surgeries, and more people would be interested in them. And if you look back in its history, you can see that it was trading way back in 2019 at around $3.92, and then it went down, and then it slowly went back up to $1.25, and then it went up to $3.23 in February of this year, and then it went back down again, but now it's starting to go back up, and it's right below its 50-day moving average of around $2.27. Based on tip ranks, they also have a moderate buy rating based on one analyst who believes that this stock will go to about $4, and this means that there will be a 98% increase from where we are right now. Okay, moving along to number 3, LPCN. LPCN Inc. is a clinical stage biopharmaceutical company with a focus on the treatment of both endocrine and metabolic disorders. It utilizes its proprietary drug delivery technology to produce a large pipeline of compounds. LPCN has already received tentative approval from the FDA for endogenous testosterone deficiency or hypogonadism. Additionally, its LPCN 1107 compound has been granted orphan drug designation for its potential to prevent recurrent preterm birth in patients. In mid-March, LPCN announced its full year 2020 financial results. In the results, CEO Dr. Mahesh Patel stated that LPCN had a number of important accomplishments in 2020, most notably the US FDA decision to grant tentative approval to Tilando, the company's oral testosterone product for testosterone replacement therapy in adult males with hypogonadism. Financially, LPCN reported a net loss of around $21 million or 38 cents per share, but it also ended the year with almost $20 million in unrestricted cash and cash equivalents. This was also before the recent $28.7 million public offering, which was completed in January 2021. Among analysts, the consensus is a buy, with the most recent rating coming from H.C. Wainwright. The firm also set a $3 price target on the stock. So as of today, the stock is trading at $1.56. Today it went down 1.89% or 3 cents. And the RSI strength is at 49, which is pretty solid. And the stochastics is turning back around, going back up. And you can see here there was a big jump in volume on March 17 for 57.3 million shares. And this could be from the news that, this testosterone therapy could be very beneficial for patients. And overall, there's gap is always going to be filled, when it goes down from the previous highs of $2.78, and it dropped to around 80 cents back in November 2019. So this gap is going to be filled, and it's already filling up, and it could potentially go back up to where we were back in 2019 and even back to 2017. Here on tip ranks, there is a moderate buy rating from one analyst who has a price target of $3 for this share, as we discussed earlier. And that means that there could be a 92% increase from where we are currently. Okay guys, here's my number 4, OBLN Therapeutics, with a ticker symbol OBLN. OBLN Therapeutics is another medical tech company with interesting prospects. It focuses on weight loss, and it produces and commercializes novel technologies. This includes its FDA-approved swallowable gas-filled balloon system that sits in the GI tract to treat obesity. Similar to LPCN, OBLN recently reported its full year 2020 financial results, as well as results for fourth quarter 2020. On top of the signing of a merger agreement with Reshape Life Sciences, OBLN managed to greatly reduce its net loss. OBLN brought in a net loss of 17 cents or $1.3 million. This is much less than the 64 cents or 4.9 million loss it brought in during the fourth quarter of 2019. When OBLN and Reshape merged last year, the shares of OBLN stock shot up by an astounding 500%. Bart Bandy, CEO of Reshape, stated that we are excited with this opportunity to add OBLN's FDA-approved balloon system to Reshape's line of minimally invasive weight loss solutions, which also expanding our market reach. If we take a look at the stock chart right now, it's trading at $2.81. Today it went down about 9.65% or 30 cents. And the RSI strength is at 41, which is also pretty good. It's pretty solid. And the stochastics is at 28. And I could see that there was a huge volume back here in January 2021 of 445 million shares. And that was based on the fact that there was some news of it merging with Reshape. And again, over here, there was another big volume jump of 214 million in December 2020. So all of this news is very good for this stock, and any positive news for this is just going to raise it up higher. So right now it's trading between the 50-day and 200-day moving averages, between 379 and 179. I believe that as this stock, gets more recognizable and commercialized with Reshape, this stock has a lot more potential for it to grow and go higher from here. According to Tip Ranks, they have a moderate buy rating of $6.15, which is a 118% increase from the last price of $2.81. So that is a huge jump from where it is right now, guys. So there is a moderate buy rating on this to buy. So check it out, put it on your watch list. Make sure you guys keep track of this, because these stocks make big moves very quickly because they're very volatile. You can make a lot of money, but you could also lose a lot of money. So watch out for that, and just make sure that you're watching out all the catalysts that go into these stocks, because one news could either make it go up or one news could really make it go down. Okay guys, so my next one is called Astrotech Corporation with a ticker symbol ASTC. Despite falling like a rock in February, Astrotech has done a good job recovering in March and now April. Shares of ASTC stock have now bounced back more than 50% from their March 5th low. This comes at a point where the company has begun scaling its operation. Astrotech's technology subsidiary recently engaged Sanmina to begin manufacturing its mass spectrometry products. On top of this, Astrotech came into the spotlight this week thanks to its latest 8K filing. In the filing, the company highlighted its Biotech subsidiary. Specifically, Biotech signed an investigator-initiated study agreement with the Cleveland Clinic Foundation. The clinic will use Biotech's Breath Test 1000 to compare COVID-positive and COVID-negative patients and analyze different compounds from their breath to see if there's any correlation. And if this goes through, you can do a breath test to see if you can be tested positive for COVID-19 instead of being tested more invasively with a Q-tip going down in your nose or your throat. Obviously, with any virus-related news, attention tends to focus on specific companies issuing the updates. Let's take a look at the stock chart today. The stock was at $2.21. It went up about 1% or 3 cents total. But the volume of it has jumped tremendously by 58 million shares. And the RSI strength has ticked up to about 51. And the stochastics is at 48. One thing to look at about this stock is that it's very volatile. You can see back from 2018, it was always going up and down. And it went all the way down to about 171. And then it jumped to about 498, and then it was zigzagging up and down until 2019. It was at again 121, and then it went back up again to $3.16 in 2020, and then back down again to 168, and then back up and then back down again. So we could see this go back up one more time based on the news of this testing coming out. So guys, let me know, what do you think about this? These 5 biotech stocks, pharmaceutical stocks. Again, these are very volatile. You have to be on the watch out for them very carefully. You can't just buy and forget about them. You have to buy and watch the news and any catalyst that can come out, because any one news can either spook it and make it go down, or it can make it go up and be very, very successful. So guys, if you guys like this video, please give me a thumbs up, like this video, subscribe to my channel if you haven't already done so. And thanks for watching, and I'll see you guys in my next video.